As a trader who has spent years in the markets, I can tell you that understanding the higher time frame is like having a secret weapon. Yes, it's not for everyone, but if you are serious about trading, then this technique can significantly increase your chances at making profitable trades. So why do I care about the higher time frame? This is where probability comes in. Probability is a massive factor of my trading, and what I'm trying to do consistently is put myself on the higher side of probability. How do I do this? I use the higher time frame. What do I mean by the higher time frame? Looking at the daily, the weekly, even the monthly charts to get a clear picture on the overall market direction. That big picture view helps me identify those major points in price where we can see a move in the opposite direction, or we can see continuation in the same direction. How do I do this? I use a process called range initiation, mitigation, continuation, and it is a fractal concept that we at NGAT utilize. We trade Euro USD. If it's something that you're not familiar with, a range is where we see contained price between two price levels. An initiation is when price leaves that range in a direction. A process of mitigation is when price is moving back into that point of that range where we can see the mitigation, and then the continuation is the move past the previous low. What can we see on Euro USD? We did have a previous range in the market. Here we had that range that was presented to us. That range moved in that initiation direction. We can clearly see that is bearish, and then prices most recently in July returned back into this point of mitigation. Now there's a few things here that turn this into a high probability setup. I will go over that on a lower time frame. But for now, we can identify the point of mitigation. It's here where we can start to anticipate that move in opposite direction and be a part of high probability conditions to be able to capture those profitable trades. And it's those trades that are placed in the correct direction that you will likely see profit come from. So going back into this, imagine you didn't know what chart this was and we was looking at any time frame here. The fact is that range initiation, mitigation, continuation is a fractal concept that we can consistently apply, and this is how we can consistently apply it. It's at the point of mitigation that we want to be looking for trades in the opposite direction. The process of mitigation is saying that orders have been filled and placed, and now we can start to see a move in the opposite direction. The representation of that on a lower time frame should be quite obvious, and that obvious delivery is what we can then start to play. Let's head down to the lower time frame. We'll do the side-by-side view to start with, so we can see the exact point of mitigation. So here we can see that process. We can clearly see that here is that point of mitigation. And let's see how price delivered at that location. Remember, we're using range initiation, mitigation, continuation to identify the current phase in the market. I'm going to ask myself, are we in a range phase? Are we in an initiation phase? Are we in a phase of mitigation? Or are we in a phase of continuation? And I should be able to identify that clearly at any point in time. And it's that information that's going to lead me to make decisions. Remember that this information's fractal. My 1 minute strategy is utilizing the same processes as I do on a higher time frame, looking for those high probability trades. At the run of that previous high, what did we see? We saw price started to slow down in that range. We had that move to the downside outside of the range. We returned into that range for that mitigation, and then price moved lower. But what do we notice? Price does not continue in that direction, which is the continuation of the previous range initiation in that bullish direction. So nice. What we can identify here now is price is starting to slow down. We've run our previous high and we can see that price is contained. It's in that contained price delivery that we can now start to understand that the phase of the market is no longer in initiation like we was prior. It's now in a phase of a range. And a range is equal to BFIs, the banks and financial institutions, building positions in the market. It's here we can anticipate that the next phase of the market is going to be initiation. And what we should do then is, within our sessions, be ready for that initiation. So here we can clearly see that range phase continues. We can start to identify that phase using our frameworks, that sideways structure, and we can see here that we are presented that sideways delivery. Now, this was very easy to understand, and likely if price is going to return, we're going to slow down. And this slowdown in price, this range, leads me to believe that the next phase is initiation. And yes, the initiation can be in either direction, but based on the probability and the location of the higher time frame, let's quickly go back to our range initiation. I'm anticipating that is going to be to the downside. And although that is a narrative that I have in the market, that is a scenario, I have to watch that scenario play out. And the way I would do this is by identifying the previous lows, because if there is a new range initiation intention in the market, then we are going to take the previous lows that have been presented to us. And this is going to lead me to even more higher probability trades following the correct higher time frame intention. Continue moving through price. And we see that over time, price is continuously making lows, and we can identify that state of delivery. We do have our range, we do have our initiation, we do have a range, and we do have initiation. So this is what we're identifying here. We can see that clearly price has not pulled back to mitigate any previous orders. And that for us is a clear sign of a market that is an initiation. If we're seeing this sort of delivery come out of a range, then you can bet that that is the market direction. And this is what we should be looking to do. Follow that intention that has been presented to us. I don't trade Fridays, but we can see here that market started to slow down in those lower prices. And that evidence was again presented to us in a sideways range. One thing that is clear is that we're not going to sell in discounted prices. We're always going to wait for price to come into premium before we look for those continuation sells. And this is a new week that we're about to head into. And these are the concepts that I'll be taking forward, looking for those clean opportunities. So here we are. The first trade's presented itself. Remember, only because we understand the direction of the market and we've seen that confirmation be presented to us, it doesn't necessarily mean that we can enter on that understanding straight away. For me, I only trade London sessions from 8 till 10 o'clock. And I'm looking to play that higher probability scenario in my session. Now, this trade is based on my 1 minute strategy, but for now, we're going to stay just at a higher time frame so we can move through this quite quickly. We can see here that we've been shown a range. That range has presented itself after taking a previous high in the market. And then we start to see that we get that initiation delivery to the downside. So we get that lower time frame range being presented to us. And then we get that initiation to the downside. Then we get another sideways range. We get another initiation to the downside. And it's here where I was able to take my entry right at 8 o'clock based on that mitigation process. So range, initiation, mitigation, continuation, looking for that previous low. Now, coming into today, clear observations of what I want to be doing. I want to be selling based on the location of price. We can see here, based on that sideways delivery, prices coming out of premium prices. We're starting to initiate to the downside, and I'm playing that continuation of that intention. And if you see here, winning trade, my profitable trade is coming off the back of that higher probability understanding. It's why we should be utilizing these processes and understanding what equals high probability and how can I involve myself in that. Well, here we are, continuation, fractal concepts that lead us to make similar decisions, be aware of the decisions we're making, and ultimately follow in a higher time frame. So now we can see prices continuing in that direction. What I'm really interested in when I'm seeing the higher time frame deliver is that likely price is going to be aiming for previous lows in the market. So this is what I'll try to identify, previous lows that are presented to us. So we had one here. This is what I was aiming for when I was looking for that short. Here we had stack lows as well. So that was a nice liquidity point to look for, especially in this location in the middle of the range. And ultimately, that's what was driving that intention in that session. Now, again, I trade London session Monday to Thursday, and not every day is a high probability scenario. First winning opportunity, following that higher time frame, following my process, capping my trade at 1 to 10, and moving on with my day, ready for the next session. Here on Wednesday, we was really presented that A to B, that sideways range that was containing price, and that guided us into the rest of the week. On Thursday, middle of the range, not really interested in London session to be getting involved. This is not a high probability scenario. Then we had Friday. I don't trade Fridays, but again, we was positioned in the same sort of location. When we're in these range phases or sideways phases, I'm really looking to play the edges in price and not the middle. The middle is going to be the slaughterhouse where we're likely going to see more losses than wins. But on that Friday close, we saw that price presented itself back into those higher prices, right? So here we can see we've got that sideways range. Let's just extend our range as we can see and zoom in here. We can see that price is presenting itself in premium. What stands out to me here is that one of that previous high, and what did we notice? Price is ranging here for that move to the downside, and we get that range initiation state of the market. We get that range initiation once again, and price is pulling back into that previous range for that positive mitigation. Now, again, I won't get into this on a 1 minute basis. I literally just made a video today for the whole community, breaking down my trades for July. But here is another opportunity where I look to get involved, in that continuation process into lower prices. And really, we can see the extent of the move, the aggression, delivery that was presented to us, and why we would want to be in these sorts of positions. Most importantly, though, why is price moving lower in this fashion? Well, we can go back to a higher time frame here and understand that this is what is currently driving the markets. And it's previous lows in this move here that I'm going to seek for price to move into. And I want to continue playing that trend delivery back into those previous lows in my session. Here's another opportunity where price is considerably high, and I can take that move into the bottom of the range, really high probability trading, previous highs, previous lows, sideways delivery, range, pullback initiation, stop in a safe place, looking for that continuation into lower prices. And that presents us towards the end of the month. Real 2 high probability trading opportunities here. And this is just utilizing my 1 minute strategy. There's other trade opportunities here that we can be a part of that are outside of my session, following that same narrative. So now with the opportunity to observe high probability conditions and be a part of the correct intention, this is what you can utilize your strategy to do, is to be a part of those high probability moves. And when we want to understand how we can be a part of that, well, what we're trying to understand is what the higher time frame is doing. If we can see here, there's multiple times where price has moved into previous ranges in the market, and we can start to see points of mitigation and continuation in the opposite direction. And by leveraging the higher timeframes, we can then start placing our trades in higher probability conditions and have an improved overall performance using this process.